Have you ever stopped to ponder where money comes from? Well, the story of money is as old as humankind itself, beginning with the simple barter system. Imagine a time when there were no coins, no bills, no credit cards. Instead, people would exchange goods directly based on their needs. An apple farmer, for instance, might trade a bushel of apples for a woolen blanket from a shepherd. But, as you can imagine, this system was fraught with complications. What if the shepherd didn't need apples? Or what if the apple farmer didn't have enough apples to match the value of the blanket? To solve these issues, societies began to use items of inherent value as a medium of exchange. Shells, beads, even large stones were used as money. These were things that were rare, durable, and could be carried around. These objects served as a universal measure of value, making trade easier and more efficient. Then came the significant innovation in the form of metal coins. The first coins were introduced in ancient civilizations like Lydia, now part of Turkey, around 700 BC. These coins were made of a naturally occurring mixture of gold and silver called electrum. The value of the coin was determined by its weight, and each coin was stamped with a seal to guarantee its purity. The idea of coins quickly spread around the world, and civilizations began minting their own coins from various metals like gold, silver, and copper. These coins had the advantage of being durable, easy to carry, and their value was universally accepted. As societies became more complex, carrying around bags of coins became impractical. This led to the introduction of paper currency. Originally, these notes were receipts for gold stored in vaults. Over time, these receipts became accepted as payment, and the concept of paper money was born. From shells and beads to gold coins and paper notes, the journey of money has been long and fascinating. But as we'll see in the next scene, the evolution of money is far from over. As societies grew more complex, so did our forms of money. It's a fascinating journey, one that saw money evolving from simple, tangible assets to intangible concepts of credit. Let's rewind a little. As commerce expanded, the limitations of barter became evident. It was impractical and inefficient, not to mention the challenge of finding someone who wanted what you had and had what you wanted. To overcome these issues, society adopted universally accepted items of value like gold, silver, or even cattle as forms of money. But as transactions grew in scale and frequency, lugging around hefty gold bars or herds of cattle became less feasible. Enter the era of coins, a more portable form of money. These were made from precious metals, and their value was intrinsic, based on the metal's worth. But as societies expanded and economies grew more sophisticated, even coins became cumbersome. This led to the birth of paper money. Now, this was a game changer. Paper money was lightweight, easy to carry, and could represent any value. Initially, paper money was simply a promise, a claim check, if you will, that could be exchanged for a certain amount of gold or silver. This was the start of a new concept: credit. The idea of credit took the evolution of money a step further. With the introduction of banking systems, money became less about physical assets and more about trust. Banks began issuing notes that people could trade in the market, confident in the knowledge that these notes represented real wealth, stored somewhere safe. Banks could lend money they didn't physically possess, based on the promise that the borrower would repay it. This created a new form of money: credit. It was no longer necessary to physically possess money to spend it. Money had transformed from a tangible asset into a promise, a concept, an idea. The notion of credit revolutionized our understanding of money, transforming it from a tangible asset into a promise. This evolution of money from barter to credit reflects the evolution of society itself, from simple to complex, from tangible to intangible. In the digital age, money is more a concept than a physical entity. This statement may sound strange at first, but let's take a moment to ponder. When was the last time you actually held a bunch of banknotes or jingled coins in your pocket? For many of us, it's been a while. That's because we've transitioned into an era of digital money. The journey started with the introduction of credit cards. These little plastic cards became the new form of carrying money. They offered convenience and safety, eliminating the need to carry large amounts of cash. But the innovation didn't stop there. Soon we saw the rise of online banking. We could now transfer money, pay bills, and manage our finances without stepping foot in a bank. All we needed was an internet connection. This transition to digital money was not just about convenience. It also brought about significant changes in our economy and individual finances. In the digital age, money became faster and more efficient. It could move across the globe in the blink of an eye, fueling international trade and globalization. On the individual level, it made managing finances easier and more accessible. With a few clicks, you could check your balance, make transactions, or even invest in stocks. But the evolution of money didn't stop at online banking. We're now witnessing the rise of cryptocurrencies, digital or virtual currencies that use cryptography for security. Cryptocurrencies like Bitcoin and Ethereum are decentralized, operating independently of a central bank. They represent a new form of money that's completely digital and promises to provide more financial freedom and security. The transition to digital money has its challenges. Cybersecurity is a major concern, and the anonymity provided by cryptocurrencies has been linked to illegal activities. However, these challenges are being addressed with advanced security measures and regulations. From physical coins to digital bits, money continues to evolve in ways we could never have imagined. As we continue to embrace this digital era, it's exciting to ponder what the future holds for money. Will physical cash disappear entirely? Will cryptocurrencies become the norm? Only time will tell. For now, we can marvel at the journey money has taken and prepare ourselves for the exciting changes yet to come. But what gives money its value? Why do we trust a piece of paper or a digital number? Well, the answer lies in a simple yet powerful concept: trust. Trust is an essential ingredient in the recipe for money. When we say that a $10 bill is worth $10, what we're really saying is that we trust that others will accept it as a form of payment for goods and services. We trust that the government, which issues this money, will stand behind it. Trust, however, is not the only element that gives money its value. Government backing, or fiat, plays a pivotal role too. The term fiat comes from the Latin phrase fiat lux, which means let there be light. In terms of money, fiat refers to an order or decree by the government that the currency it issues must be accepted as a form of payment. Now let's take a step back in time. Once upon a time, money was based on the gold standard. Each unit of currency was pegged to a specific amount of gold. This gave people confidence in the value of money because it was backed by something tangible and valuable. However, in the 20th century, almost all countries abandoned the gold standard and adopted what we now call fiat money. Unlike the gold standard, fiat money isn't backed by a physical commodity. Instead, its value is derived from the trust and confidence people have in the government that issues it. This shift from the gold standard to fiat money has its critics and supporters. Critics argue that fiat money can lead to economic instability because it's not backed by anything tangible. Supporters, on the other hand, argue that fiat money allows for greater economic flexibility and control. So, what's the takeaway here? Money, in whatever form, is a social construct. It's a system of trust backed by the authority of the government that enables us to exchange goods and services. We trust that the numbers in our bank accounts and the paper in our wallets represent real purchasing power. The value of money, it turns out, is largely a matter of collective belief. So, what does the future hold for money? As we peer into the crystal ball, a few key trends emerge. The first is the rise of cryptocurrencies. Digital currencies like Bitcoin and Ethereum are challenging our traditional understanding of money. They're decentralized, meaning they're not controlled by any government or central bank. Instead, they rely on complex algorithms and a network of computers spread across the globe. This decentralization offers a level of anonymity and freedom that's not possible with traditional money. But it also brings new risks, including volatility and the potential for misuse. The second trend is the move toward a cashless society. In many parts of the world, physical cash is becoming less common. People are increasingly turning to digital payments for convenience and safety. You can buy a cup of coffee, pay your bills, or send money to a friend, all with a few taps on your smartphone. This shift is not without its challenges. It raises questions about privacy and security, and it risks leaving behind those without access to digital technology. These trends have significant implications for the economy and our individual finances. Cryptocurrencies could disrupt traditional banking and change the way we do business. A cashless society could transform the retail industry and alter our relationship with money. We could see new forms of inequality emerge, as those with access to technology reap the benefits of these changes, while others are left behind. Yet despite these uncertainties, one thing is clear. The future of money will be shaped by technology, whether it's blockchain, artificial intelligence, or something we haven't even imagined yet. Technology will continue to drive the evolution of money. As we move forward, the only certainty is that money will continue to evolve, just as it has since the days of barter. The future of money may be uncertain, but it is undeniably exciting. We are witnessing the dawn of a new era, one where money is as fluid and changeable as the world around us.